Hey everybody, this is John and welcome to the free video. Let's dive right in and take a look here. Spiders down $1.13 today, down 0.39%. Fairly volatile action though. I mean, of course, since we kind of broke and rolled over here from 300, what we've seen is just a really volatile range of about 10 points on the spiders, which of course is 100 points in the SPX. And the idea here of let's short the lows and buy the highs is not work. It doesn't work, obviously, in this kind of situation. And so the question is how comfortable can we continue feeling that when we come down to this zone that we're buyers, and we come up to this zone that we're sellers. I think at this point that we are going to break down and take out the lows. Now, that doesn't mean it will happen, and a lot of people actually don't think it's going to happen simply because of the idea that, okay, look, Trump is he wants to support the market. He's going to come out and say something that's going to prop it up and make everything good again. And it's nothing against Trump. It's just that no one person, no one government can change the natural outcome of what's happening. Okay, and there's a lot of stuff that's happening right now. One of them is the inversion of the yield curve. Okay, so what is that? This is a little bit of an eyesore. Let me see if I can increase the the text size here. Okay, so in a normal environment, what happens is that, so if you look at the 30-year bond, it might be 3%. Okay, and the 10-year notes are 2%, and the 2-year notes are 1%. Again, just a simplified example. And the idea with this is then, banks can borrow at shorter term rates and lend at longer term rates and make money on that. Well, what happens with a yield inversion is specifically between the 2 and 10 is that the 2-year interest rate is higher than the 10-year. Okay, and then all of a sudden that makes lending an unprofitable business. Okay, so how can you tell? Well, if you look right here, here's the 2-year, here's the 10-year. So back on August 1st, the 2-year note was 1.73%, okay, while the 10-year is 1.90%. That's normal. Now, if we come down to where we are today, the 2-year is at 1.53%, while the 10-year is at 1.49%, okay? So that's what's called the inversion, and the longer that lasts and the steeper that gets, the more concern that there is. Okay, so that's what's happening right now, and that's going to keep some downside pressure on the markets. Now, of course, there are some ways to benefit from that. We can, of course, short the markets, but you want to be careful with that. I mean, we did buy some puts today in the trading room on the spiders. And you might look at this and say, "Oh, that's awesome that you made $5,000." Well, it is, but at one point, I was up about twice that, and then I got out and it rolled right back over. And so the point is that this is a fairly volatile environment. And so you want to kind of stay on the path of least resistance, and at the same time position size in a way that it doesn't cause any headaches. So right now on the S&Ps, you can see we've still got distribution happening. Okay, these are some tools that we've been talking about in the room, and this is saying, hey, there's distribution, but also notice there's a squeeze setting up, and this could go into full-on declining mode. Okay, so what's an example of something in full-on declining mode right now? Well, if you look at IWM, that's full-on declining mode. Okay, if you look at XLF, full-on declining mode. All right, so if you're looking for something to short, there's some candidates for you there. All right, so we got a lot of crazy things happening right now. We've got yield curve inversions. We've got tariff wars. We have metals are skyrocketing. There's questions about what the dollar is going to do next. And what does all this mean? Well, it means that we're going to have some huge trading opportunities. And I have been in these kind of markets before, most notably 2007, 2008. I was also trading during the NASDAQ crash in 2000. Oh my God, that seems so long ago. But the point is, these are the best times to trade. But you have to mentally shift gears or it'll tear you a new one. So I'm going to do a webinar on Wednesday, the 28th, at 7 o'clock Central. If you go to simplertrading.com/ready. And we're going to be talking about the secret to my biggest winning trade of this year so far. No surprise, it's been to the downside. warning signs that the market is headed for a steady decline. But we're going to talk about that too, but in conjunction with how do you battle the daily tweets and how do you get positioned for it. So the whole point of something like this, and especially in a market that's going like this, is how do you take advantage of it without getting railroaded. Okay, Sunday night's a good example. I mean, Sunday nights the markets were down 30 S&P points, but then they opened up plus 20 S&P points. So what could you have done? Well, we had some positions like in the futures that were able to take off Sunday night, but what happened if you just had puts on the spiders, right? So how do you do all this? So anyway, we're going to do a deep dive into this, and this is just the kind of information that you want to be aware of in this environment, or it's going to be a very painful rest of the year, frankly. But it doesn't have to be. So anyway, should be fun. You guys have a good one, and we'll see you at the next update.